Randy Rocky, Swan Financial. Benny sent us an email. How long after foreclosure starts will he have to leave his home? Obviously, he's in somewhat of a trouble here. On your thoughts on that, Lee and I will give our thoughts as well.
Well, I don't think you have to leave until, what is it, Lee? Until actually, I guess when they auction the property off, or when you think that, I mean, can they legally kick it?
I would say when they evict you. Lee, how about you?
Yeah, it's quite a long time from the time that you might receive notice
Exactly.
that your mortgage is in default, or that you are receiving a lis pendens, which is a document that's filed of record by the lender to say that there's a claim on this property. And they have to serve the person that has 20 days to respond to that. And then there's a whole lot of other stuff that goes on to get it finally to the master commissioner sale. Once the master commissioner sale happens, a lot of times people will move out then because there's a new buyer, but they don't necessarily. And then the buyer can get what's called a writ of possession, and they have to go to the sheriff's office and get that. And that could take another, couple of weeks to get the person actually moved out. So from the time you find out that you realize that you're in trouble, you probably have at least a good 6 to 9 months, I would say.
Yeah, and also, if you go through foreclosure, if they do improvements the first 6 months, can they come back and take the house back over
if you get foreclosed on, they have to do what's called 2 disinterested housekeepers, believe it or not. That's appraisers who will come up with a price. If it sells for less than 66% of that, then the owner can redeem it within a year. So if you ever buy one and it's less than 66% of the appraised value, you probably want to talk to the owner about buying them out of their redemption right. Otherwise, you could have it for a year and they could come back if they can find the money.
Yeah, you put all that money in it and then they come back a year later and go, wow.
So I will also tell you that doing this 20 plus years, we've seen a lot. And back in 2007, 8, 9, 10, 11, 12, the banks learned a lesson that in the event of a owner of a home going under in terms of a problem, for example, it could be a marriage, it could be loss of job, it could be health issues. Rather than kick them out of the house, the banks started to realize it would be better for that homeowner to stay in the house, maintain at least electricity and water to keep the house in somewhat of a stable operation until things calmed down and we were able to move forward in a good method. Now, that doesn't happen all the time, but a lot of banks learn their lesson. And so I will tell you that that it's not so prevalent, Benny, that you're going to be forced to leave anytime soon. But just try to work with the bank. And then the other option is, and this will sound like a shameless plug, but I will tell you it's not, is you contact a real estate agent who can help you get out of the house in what's called a short sale, where the bank will agree to let you sell the home for less money than they're owed. And that happens all the time. We did a lot of it. So I'm just saying, and there are a lot of agents, great agents in our Louisville and Southern Indiana area who could help you with that, as opposed to letting the bank force you out of the house. You leave on your own terms with dignity, is how I would say it.